Hello and welcome to Collective's webinar today. It's a webinar Wednesday. While everybody is filtering in, go ahead and type in the chat where you're joining from. And if you want to include what type of business you have, that would be great too. I'm in Florida, so we're having some pretty nasty weather here due to the hurricane that's on the Gulf. Oh, Brian, you're from Florida too. Cool. So yeah, hopefully let's pray for no internet issues from interruptions from the storm. Yes, great question, Swati. Sarah will send out a recording of the webinar within 24 hours. All right, just gonna give everybody maybe 1 or 2 more minutes to just kind of get situated and filter in. If you need to go grab water or coffee or something, feel free to do that right now. I've got both here with me. Always need caffeine. Good morning. Okay, it sounds like we've got people all over. That's wonderful. Okay, just gonna give like 1 more minute and then we will get started. Bunch of Texas folks here. Got some West Coast folks too. Okay. So I think that should be good. Hopefully we're good to go ahead and get started. So my name is Elizabeth Mullins. I have been at Collective for almost 3 years. It'll be 3 years this November. I absolutely love Collective, and I'm excited to talk to you guys about Collective, about S Corps, and how to backdate your S Corp election. So just, a little bit about me. I am an enrolled agent, which just means that I have my credentials through the IRS. Again, I've worked at Collective for about 3 years. And before this, I worked with small business owners, helping them with what's called tax resolution. So if they did happen to owe a balance to the IRS or their state taxing authority, I help them with a fair and equitable case resolution. So very passionate about working for and with small business owners. Just a couple quick housekeeping items before we really dive in. You'll see this QR code pop up every couple of slides. You can scan this code if you're interested in scheduling a call with one of our business advisors. It'll appear at the end of the webinar as well, but it is going to pop up throughout, so that way we make sure you have every chance to scan the code if you just want to schedule a call to talk about your unique situation, perhaps more in depth with one of our advisors. We will also be offering a discount if you think that Collective's services align with your business needs. If you do sign up with the webinar code, you can get your first month at 50% off. And we'll cover this later as well, but you can also get your personal tax return prepared for free if you sign up by the end of September. So a couple surprise goodies in there for you. Again, we'll go over those more later, but today we're really just going to talk about Collective, what we do here, some self-employed tax basics, what exactly is an S Corp, how do you backdate it, and how does Collective make S Corps easy peasy. And then we'll have a Q&A. So please, if you can try your best to just put any questions in the Q&A box. If you put them in the chat, that's okay too. We just want to make sure that, we're not missing any questions. So if they are in the Q&A box, we can make sure that we hit all of your questions. So just as a disclaimer, this webinar is for educational purposes only. This is not legal or tax advice, obviously, because I know nothing about your individual situation. So always consider consulting a tax professional if you need legal or tax advice in operating your business. So what is Collective? We are the first all-in-one financial platform that is designed specifically to support self-employed people. And here's that little QR code again. So you'll see it keep popping up. Now, let's take a look at your money when you're self-employed. Just kind of everything floating around, like you're happily running your business, but you've got all these pesky bubbles kind of floating around where you're thinking about, okay, how do I make sure my business is set up properly? How do I get a bookkeeping system in place? Am I even doing bookkeeping correctly? Do I need payroll? How do I save for a retirement account or get health insurance? And then when it comes to financial advice, where do I turn for that? And then taxes, obviously a big concern because everybody wants to be in their good graces with Uncle Sam and make sure they're in compliance. So you've kind of got a lot of things floating around. And then when you need to make a financial decision, it becomes even more confusing and the stuff can feel really daunting, especially being self-employed and that you're a business of one. So you don't really have a lot of people that you can turn to that can advise you on this stuff. And how does my business setup relate to compliance throughout the year? And how does that relate to what my tax bill is going to look like when I file? Do I have the right financial reports? Am I making estimated tax payments properly? Again, are my books being done properly? So this is something that Collective can help with, a really streamlined, cohesive experience for you. We take all of those pesky little bubbles that are floating around and just kind of group them in a nice line for you. That way we can make sure we're covering all these bases. So in terms of support, we try to be a one-stop shop where we're going to send you compliance reminders and help you make sure that your business is in compliance and, again, not in trouble with Uncle Sam. We prepare taxes. We do formations and setups if S Corp is the right structure for you. We handle your bookkeeping. We send you financial reports on a monthly basis. We run the payroll. You can get financial advice from your dedicated account representative. We also calculate estimated taxes and help you plan for retirement and other benefits. So it's just, again, a more cohesive, streamlined experience where everything is going to be taken care of for you. So we're going to do a little poll real quick. Sarah's going to run that. Let us know what stresses you out the most when it comes to taxes. Is it setting up, making sure, your business is the correct entity that you want? Is it the filing and prep of your taxes? Is it the bookkeeping beforehand? Finding the right person to do this, or retirement planning? Okay, just give a minute to answer that. All right, let's talk about some self-employed federal tax basics. So there's a couple different types of taxes that self-employed people pay. What you generally think of when people talk about their taxes is income tax. For income tax, individuals are going to pay somewhere between 0% and 37%. That's going to be based on your tax bracket. Most of us, everyone, like it says, has their own marginal tax rate, but most of us kind of fall into the 20% to 37% range. That's the most common. And then on top of income tax, there's also self-employment tax. Now, self-employment tax is a flat rate of 15.3%. And it's FICA taxes. It's the same thing as payroll taxes. Just when you're self-employed, they have a different name, but it's those Social Security and Medicare taxes. So the main chunk of that, 12.4% of that, is going to be the Social Security tax, where 2.9% is allocated to Medicare. Now, when you're a W-2 employee, if you ever were a W-2 employee back in the day, or maybe you're still a W-2 employee, you know that you would see on your pay stubs that dreaded FICA. So again, that's exactly what this is. So like for me, I'm a W-2 employee of Collective. I still have to pay into this 15.3%, but I personally only have to pay half. And then Collective matches and they pay the other half for me. But when you're self-employed, you are responsible for the whole enchilada. So you have to pay that entire 15.3%. Why are self-employed taxes so expensive, you may ask? So let's look at just a breakdown of what we kind of talked about here with some examples. So let's say that based on your earnings, you're going to owe $15K this year in Social Security and Medicare tax. When you're a W-2 employee, again, you're paying half of it, $7,500, and then your employer is paying the other $7,500. When you're self-employed, you have no benevolent employer to pay that other half. So again, it's like double. So that's why it can feel really expensive when you're self-employed. So let's look at how sole proprietorship / LLCs are taxed. And just so everything is clear, LLC taxation, if you are just a single member LLC, defaults to being taxed as a sole proprietorship, which most of you probably already know. The IRS and taxing authorities refer to it as what's called a disregarded entity. And it's exactly like it sounds. They just disregard that you have an entity and continue to tax you as a sole prop. So how that's going to work is you get your revenue, which is the money that you earn from running your business, from offering your goods and services. You subtract any tax deductions, and then you arrive at your net income. So gross revenue minus your deductions equals your net income. If your net income is positive, it's a profit. If your net income is negative, that's a loss. You take your profit or your loss, and that's going to pass through to your individual tax return. Your business profits are going to be then subject to self-employment tax at 15.3%, and then income tax at whatever your ordinary income tax rate is. Like we talked about, most of us are in that like 20 to 37% range. So you take your business profits, all other income. So if this business is maybe your side hustle and you've got your W-2 job, or you file joint with your spouse and your spouse is a W-2 employee, it's going to take into consideration all other household income minus any personal adjustments that are made, minus either if you take the standard deduction or itemized deductions. And then that's what you're taxed on. So what is an S Corp? First, let's just briefly go over legal structures just to make sure that this is all making sense and all the dots are connecting. So a legal structure is going to be an entity that is formed in a particular state with the Secretary of State. So think of like an LLC or a corporation. Those are legal entities. The legal entities require a formal organization process, again, usually with the Secretary of State, and that is different than the taxing authority in most cases. You are required to file an annual report in most states, which just lets the state know like who's managing the entity, basically what your business is up to. And that is different than your annual tax return. An S Corp is not a legal entity. So it's not, like an LLC or a corp. It is what's called a tax election. So, like we talked about before, when you're an LLC and you're a single member LLC, so you're a disregarded entity for tax purposes, meaning the IRS is disregarding your entity and taxing you as a sole proprietor unless you ask otherwise. An S Corp would be one of those other ways you can elect to be taxed if you have a legal entity in place. So you can't go directly from sole proprietorship to S Corp. There has to be that kind of step in the middle of forming a legal entity. Sole proprietors don't have what's called tax flexibility, meaning that the IRS doesn't give sole proprietors the right to choose how they're taxed. So you do have that tax flexibility with an LLC. You get your liability protection and you also have your tax flexibility. So, like we just talked about, the IRS decides how each business structure is taxed. Single member LLC, taxed as a sole prop, unless you ask to be taxed otherwise. So you can ask the IRS to tax you as an S Corp, which is just a more efficient business structure. Obviously, we love them here at Collective. That's like our thing is S Corps. And they can potentially save you money on your taxes. And we will go into all that. So what do taxes look like when you're an S Corp? Well, for one, and the mechanism that drives those tax savings is that S Corp owners don't actually pay self-employment tax on their business profits. So that S Corp election that we just talked about, asking the IRS to change how you're taxed, saying, hey, I would like to be taxed as an S Corp, creates an employee-employer relationship between you and your business. So you kind of wear both hats. Because you become an employee, you're required to pay yourself a reasonable salary or like a formal payroll. This is typically done through, a payroll provider. Your employee wages are going to be subject to the payroll tax that we talked about, those FICA taxes, that 15.3%, just like self-employment tax. So half of the payroll taxes are going to be withheld from your paycheck and half are an expense for the S Corp. So your S Corp profits and employee wages become part of your personal income. So you're going to pay income tax on everything, but you're not going to pay self-employment tax on everything. And we'll look at this a little bit deeper. And if you have questions on this, totally understand, just throw them in the Q&A and we will definitely take a look at those. So this is just a little bit of a refresher of what we already looked at on how sole proprietorships or single member LLCs are taxed. Again, we've got our gross revenue minus our deductions, giving us our net income. The profit or loss then flows through to the tax return. You pay self-employment tax on the business profits. And then you take that minus any other personal adjustments, plus any additional income, minus the standard deduction or itemized deduction, and then you get your taxable income. With an S Corp, it does work differently. So because you have income now being categorized in two ways instead of just one. So like here, we looked and saw, went too far, that your revenue minus your deductions is just all your net income from your business. With an S Corp, you've got your salary and you've got your expenses. Now your salary is actually an expense for your business with your S Corp. And you pay the payroll taxes of 15.3% on your salary. You then arrive at your profit or loss. So again, we take the salary minus the payroll taxes, and then your S Corp revenue. Sorry, let me start over. Your S Corp revenue minus the salary and payroll taxes minus expenses leads you to your profit or loss, which still passes through to your tax return. So then we take the salary plus the leftover business profit, and that is what you pay income tax on. So I like to say, let's think of S Corp income in two different buckets, okay? So bucket one, you've got your reasonable salary, and bucket two, you've got the amount that's left over in your business profit after your business expenses that is not part of your salary, right? So just your business profit in bucket two, just the salary in bucket one. Bucket one, you're still going to pay that 15.3% in Social Security and Medicare tax, and you're going to pay income tax. But bucket two, you're just going to pay income tax at your ordinary income tax rate. You no longer have to pay that 15.3% on your business profit like you would as a sole proprietor or single member LLC, where you're paying 15.3% on everything and income tax on everything. You've still got to pay the income tax on everything with an S Corp. Uncle Sam just won't have it any other way. But for that FICA tax, again, you're only paying that on the reasonable salary portion of your income. You're no longer paying that on your profit. So let's look at this chart that shows LLC versus S Corp at $160,000 of profit. So on this left column here, this is somebody being taxed as a sole prop or single member LLC. And in the right column, this is the same business if it were to be taxed as an S Corp instead. So everything is the same right here as far as the profit, pre-owner wages. So the business is profiting $160,000. The sole proprietor or single member LLC just is not set up to pay themselves a reasonable salary and receive any tax savings. So their entire net profit of $160,000 is going to be subject to self-employment tax of 15.3%. The S Corp owner is able to pay themselves that reasonable salary we talked about. So they're putting $60,000 on this reasonable salary, and that is going to be the amount like we talked about. You only pay that 15.3% on your salary as an S Corp. So they're just paying the payroll taxes at 15.3% on just their reasonable salary instead of the entire net. So instead of paying over $24,000 in self-employment tax, like they would with just a sole prop or single member LLC, they're able to reduce that self-employment tax burden down to just $9,000. So they're saving over $15,000 in self-employment tax, which I don't know about you, but I can think of a lot better things to do with $15,000 than to keep paying it in taxes. So if we look at, how everything works, because an S Corp is still a pass-through structure, just like a sole proprietorship, just like an LLC. For the sole prop / single member, the pass-through profit is going to be all of this $160,000. For the S Corp, $100,000 is considered pass-through profit. So $60,000 out of the $160,000 is their salary. They're paying payroll taxes on that, no payroll taxes on the pass-through profit, just income tax. So the taxable personal income, as you see, is the same for both structures. It's just the reduction in self-employment tax that can benefit you as an S Corp. Now, you may be wondering, after looking at that example, okay, how did they get to 60K as far as reasonable compensation? There is no set standard, frustratingly enough, for reasonable compensation. It is a facts and circumstances argument. I always encourage everybody who is looking into transitioning to an S Corp to please consult a tax professional on this. Even if you feel collective isn't right for you, your salary is a tax strategy. It is really important as well for compliance to make sure that you're kind of in the sweet spot where you're adhering to the IRS's guidelines, but you're also optimizing your take-home pay. So collective can help with that, or a tax professional. You basically, like I said, you want to just strike that balance between the tax savings and all, obviously being in compliance with the IRS. So definitely consult somebody on that. Now, which entity is best for you? An LLC is typically best for businesses that are a bit newer, that don't have a lot of earnings yet. So if you're earning less than about $60,000 in profit per year, then it may be smarter to kind of hold off on an S Corp until you're earning over that. 60K is just collective's minimum recommended threshold. An S Corp, like we talked about, it's just a bit more of a complex business structure, and we'll go into why that is. But you typically are going to want to have some support with the S Corp structure. So we kind of factor in like the cost of our services, similar support services, and we want our members to come out ahead. So that's why we set that minimum recommended threshold of 60K profit. If you want a really simple, straightforward tax structure, no bells and whistles, then an LLC is best for you as well. An S Corp is going to be best for businesses that are earning more than 60K in profit per year. If you have enough cash flow to make regular payroll runs, you're typically going to pay yourself about once a month is considered best practice. So you want to make sure your business has the cash flow to do so. And if you want to maximize your retirement savings, there's some cool stuff that you can do with an S Corp in terms of retirement plans, like a solo 401k. You can contribute both as an employee and as an employer, and collective can help you kind of navigate that. So what's the deal with backdating? How does that work? So a retroactive S Corp election is referred to as a late S Corp election. It's typically just called late election relief. And it's a process that allows a business to change its tax status to S Corp for a previous period. So typically the IRS gives you 75 days from the start of the year to decide if you want to be treated as an S Corp. So to get that S Corp election form in timely would mean getting it in before March 15th. However, the late election relief process does exist. We can file that form for you, requesting S Corp status, so that way you can benefit from being taxed as an S Corp. We do have to submit, reasonable cause argument, just basically stating why the deadline was missed. But yeah, it can definitely help you reduce self-employment taxes. So it is an option available. So don't dismay if you miss that March 15th deadline. We can still backdate your S Corp for you. What are the pros and cons of a retroactive S Corp election? So the pros obviously are going to be lowering that self-employment tax. You have more flexibility in tax planning. So like what I mentioned, with the solo 401k option, you've got flexibility there. If you want to set more aside for retirement, that can be really beneficial. And then it leads to, having to really go through the books. So if there are any oversights, there can be corrections made ahead of time. The cons would be, again, it's just a little bit more complex. You do need a bit more sophisticated and robust bookkeeping with an S Corp, because you need a balance sheet in addition to a profit and loss. There's also a payroll requirement. So we talked about that reasonable salary a couple slides back. You really need to be able to notate clearly what is salary. Are you, having taxes withheld from that? Are you having retirement contributions taken out as well? And then what are you taking in shareholder distribution? So there's more moving parts with the bookkeeping and payroll involved. And then there's also an additional tax return that is due every year specifically for the business. So pros are cool things you can do with tax planning and retirement, lowering self-employment tax. Cons are it's just more complex. What factors determine your eligibility for a retroactive S Corp election? So it's going to depend on what the S Corp status on form or box E of the form 2553 is. So do you have reasonable cause for late filing, and did you act quickly to fix it? Did you miss the S Corp status due to late filing of the 2553? And was it filed within 3 years and 75 days from the date in line E? So that is the maximum amount of time that you can apply for late election relief is 3 years and 75 days. So if you are wanting to go back, like say several tax years, let's say you're listening to this presentation and you're like, oh my gosh, I could have saved $15,000 last year and $15,000 in 2022. How do I go back? You can absolutely file a retroactive S Corp election for those years. However, keep in mind that the further out you go, the more scrutiny the IRS is going to give the request. Also, you're going to have to amend tax returns that were filed for those years. You're going to have to do a lot of cleanup. You're going to have to, there's a lot of administrative work that has to be done with payroll and everything. So it can be, it's a large administrative burden. So it can be pretty pricey to find a tax professional that will go back multiple years, especially if amended returns are going to be involved. So you would want to do like a cost benefit analysis to just kind of see like, okay, how much would this realistically save me versus how much am I going to end up paying for somebody to help me do this and make sure everything is in compliance. So how do you make that S Corp retroactive S Corp election? You're going to determine eligibility, like we just talked about. You're going to file the 2553, which is the S Corp election form, following the late election relief process. And you want to ensure consistent reporting for the entity and its shareholders. So Collective does have some internal kind of boundaries and deadlines for backdating S Corp elections. And that's just, again, because it's such a big administrative burden. We don't have as much of the flexibility as like a one-man show accounting firm would, because we want to make sure that we're taking care of all of our members equally. So we kind of split up the process of when we're going to backdate. So for existing LLCs, Collective can backdate your S Corp election to July 1st of this year if you sign up with us before October 31st. That is our deadline. And that means that you could have 6 years, so half of the year this year, elected as an S Corp. Now, if you are a sole proprietorship, we aren't able to backdate the S Corp election. The S Corp election would be submitted for approval on the date of LLC formation. Because like we talked about, we've got to have that LLC as like a stepping stone in between sole prop and S Corp. So if you are thinking of becoming an S Corp this year, if you are eligible, making over 60K, you have the cash flow, you think it would be a good move. It could reduce your tax bill by potentially thousands of dollars. And then next year, you'll be set up for a full year of benefits. So collective makes S Corps easy. Like we talked about, they are a more complex structure. So running an S Corp on your own without collective, we've got these pesky bubbles back, right? Like, how in the heck do I set this up? I've got to get my EIN. I've got to file the 2553. I've got to register for a payroll ID with the state, which can take hours. I've got to make sure I'm in compliance with the state and compliance with the IRS. How do I figure out my reasonable salary? What bookkeeping software do I use to make sure that I have robust enough bookkeeping to support this new structure? Where do I get financial advice? What the heck is an accountable plan? How do I set up a solo 401k? Do I still need to pay estimated taxes? It can be really daunting, but with collective, again, it's a cohesive experience where we help you with the entire process. We set up the S Corp for you. We get you set up in our bookkeeping and payroll software. We do your books on a monthly cadence. We send you financial reports to review every month. We handle the taxes for the S Corp. We help set you up on an accountable plan, which is a really cool option for S Corp owners. It's essentially an employee reimbursement plan. And if you are interested in learning more about that, I definitely suggest, of course, you can always Google, but you could schedule a call with one of our advisors and they can give you information on the accountable plan. You also get ongoing financial advice, and we make sure that you're in compliance with the state and the IRS. Collective works with full-time solo entrepreneurs, making, again, 60K is that magic number in profits with minimal W-2 income. So you can be a sole proprietor, you can be a single member LLC, you can be an LLC already filing as an S Corp, as long as you have 60K in profits or more, chances are we'll be able to work with you. With collective, you get one login to run your business. So all of these things, again, are included. So what is necessary to form the S Corp? So if you don't have an LLC in place, we will have to form that underlying legal entity. And we work with single member based LLCs. So we would form the LLC for you, file the S Corp election, get your EIN, and then prepare the operating agreement. In terms of bookkeeping, just to break down the services a little further, we assist with doing your books every single month. You get S Corp specific accounting. We set you up with your accountable plan, and then we send those reports to you every single month. So that way, if you notice, maybe you have an account that you had some business expenses through, but you didn't include them. You can always get with us, give us the expenses, upload them, so that way we can get everything included. Doing the books on a monthly basis just gives us the chance to catch anything before it's too late. That way you don't have to scramble at the end of the year, locking yourself in your office for 3 days, going through your bank statements with highlighters, trying to get your profit and loss ready to give to your accountant. It's just everything. We're on top of it. As far as payroll goes, payroll is really important because it is the mechanism that drives those tax savings, like we talked about. We partner with Gusto to run payroll. They're an amazing payroll provider. So it's collective payroll powered by Gusto. We run your payroll. You can pay your contractors and file 1099s through us as well. Or if you have a W-2 employee or you're planning to hire one in the future, we also take care of the payroll tax filings, and we provide guidance on reasonable compensation. And then as far as taxes go, we provide the S Corp tax return, which you file annually. It's a different form. So if you are running an LLC, you're used to filing your tax return for your business as part of your personal return on your Schedule C, or same thing with a sole proprietor. The S Corp has its own separate tax return that's due every March. So it's due a month before your personal return is due, and it has to be filed before your personal return can be filed. So the S Corp return is just an informational return. You don't have to worry about any type of corporate income tax. It's still a pass-through structure, meaning everything is still going to pass through to your personal tax return. You would just get a W-2 that's a record of your wages, and then a K-1 that's a record of your distributions. And then we also provide quarterly tax estimates for you as well, just making sure you're not missing those and you're not having to live in fear of a big tax bill or lots of penalties or interest. And then we also provide support. So we make sure that you are in compliance. We send compliance reminders to you. You also have a support team that you can message anytime with people just like me. I've been, like I mentioned, with Collective for about 3 years. I started off on our sales team as a business advisor, and I've recently transitioned into a support role as a member relationship manager. So if you become a member of Collective, you do get your own account representative that is a tax professional that you can message anytime. You can hop on calls with us. If you have questions about Collective or your account or setting up a retirement plan, we are here to assist and help you anytime. So again, I know we went through a ton of information, but if you do have an existing LLC and you're thinking that an S Corp would maybe be a good move for you this year, Collective can backdate your S Corp election to July 1st. And October 31st is the last day to do this, to get the S Corp savings for this tax year. And like I mentioned at the top of the call, if you join before September 30th, your personal tax return is on us. So we'll do your business return and your personal return. And then again, we've got the little QR code. So how much does Collective cost? We cost a fraction of what a CPA would charge. We are just $349 per month, or when paid annually, it comes out to $35.60. So it brings the cost down, if you think about it on a monthly basis, to about $296 per month. So you save 15% when you pay annually, but you can always start monthly and then switch to annual later. We do have a one-time onboarding fee of $199 that just encompasses us getting everything started up. And we are tax deductible. So we are 100% a deductible business expense for you. And we will pay for ourselves within months. So again, you can schedule a free call with one of our advisors if you'd like to talk to them more in depth about your specific situation, or if you're thinking that Collective would be a great solution for you. Scan this QR code, use this code SEP25W24. That's going to give you half off of your first month. And remember, if you do decide to get started with us before September 30th, we will throw in your personal tax return completely free. So I will leave this screen up in case you want to scan this QR code, and let's get started on the Q&A. Thank you guys for sticking around and bearing with me. Okay. And Sarah, you'll be happy to know that the Q&A box is working for me this time. Okay. So Catherine asked, do you have handouts? I'm not sure what that's referring to. Do you mean like, are we going to hand out the presentation? If you could clarify, that would be great. But if not, yes, I think that's what you mean. Sarah will pass out a recording of the webinar within 24 hours. Okay. What if someone has already retired and is receiving Social Security who is starting an LLC? How are taxes applied? That is a great question, Regina. It can be a little bit more complicated, as you know, with the Social Security income limits. I would suggest scheduling a call with one of our advisors so they can get more information about your particular situation, your benefit amount, to see if an S Corp would make sense for you. When paying out distributions, how is that money taxed? So Eric, the distributions are just taxed at your ordinary income tax rate. So that's like what we talked about, the tax bracket. You would take, the net income from your business, figure out how much that is, plus any other household income if you file jointly or if you have other ventures. You'll find your percentage for income tax, your bracket, and that's how that's going to be taxed. No self-employment tax on those. So when a business is just starting, mostly losses, no profit yet, it's not an advantage to form an S Corp yet, right? Because you're not worried about the 15% tax on profit. Yes, exactly. When you're just starting out and you're not bringing in a profit, you're not going to see the tax advantages of an S Corp yet. So it's great to have it in the back of your mind and kind of plan for that as like a goal for the future. But you would essentially just be kind of like putting yourself into a more complicated business structure without seeing the benefits. So we recommend holding off until, about 60K. What is the best tax status for an independent services consultant not making more than 60K? So if you're under that 60K profit threshold, then you can either be, set up as a sole prop or an LLC. The sole prop is, it's totally fine to operate that way. With an LLC, you're going to have a couple more requirements, right? Like you've got to form that LLC. Depending on what state you live in, you have to pay an annual report, you have to file an annual report and you may have to pay an annual fee. Some states don't have those things, but some do. But with an LLC, you also get the benefit of having liability protection and tax flexibility. So if you're thinking like, okay, maybe this year I'm only going to make 30K, but next year I could get close to that 60K. And I'd like to have the option, if I do get there, to be an S Corp and to make that election and be able to backdate, then I would recommend setting up that infrastructure of the LLC if the S Corp is your long-term goal, because you have the infrastructure to do that. But if not, you can totally just rock and roll as a sole prop. Nothing wrong with that at all. Can you backdate your S Corp election for multiple years? Yes, Michelle, you can go back 3 years and 75 days. Like we talked about during the presentation, though, it can be pretty pricey to do that because you would have to amend prior year's tax returns. They would have to file S Corp returns for you for those years and then amend your personal returns for those years. So you would just want to do, your own kind of cost benefit analysis to see if it would be worth it. Is there a form for retroactive S election? It's the same form. Swati, it's the 2553. You would just have to include a reasonable cause argument. How does an owner draw play if you also have a salary? Great question, Sophia. So the owner's draws, or within S Corp, we call them distributions. Those are just taxed your ordinary income tax rate. So no self-employment tax on those. You can take a distribution whenever you want. They are meant to supplement salary. So we encourage our members to take, payroll on a monthly basis and also distributions on a monthly basis as well if you want, or you can do really whatever works for you. Some people like to take a quarterly distribution, or some people do it once a year. Some people do it twice a month. Some people do it twice a day. So it really just depends, but you have full access to your leftover business profit. There's no benefit to letting it just sit in your business bank account. If you want to leave a buffer there for business expenses or estimated taxes, that's totally fine. But since the S Corp is a pass-through structure, you're going to be taxed on that money the year in which you earn it, regardless of when you distribute it. So you can take those distributions whenever. Which expenses can you deduct to reach your profit and loss? We are an LLC. So, Sophia, as far as expenses, it's kind of going to depend on your industry, but anything that you can deduct with an LLC, you can deduct with an S Corp. The key for the IRS with business expenses is just that they have to be quote unquote ordinary and necessary for your work. So, if you have marketing expenses, if you travel for work, you have travel expenses, you can deduct your vehicle mileage. If you're taking clients out to meals, you can deduct a portion of those. Any software subscriptions, business use of your home, or if you rent an office. So it's hard to say exactly what expenses, without really analyzing your books, but anything you can deduct with an LLC, you can deduct with an S Corp. If I have a single LLC, do I need to run payroll for myself? Not unless you are an S Corp. You don't have a payroll requirement with this single member LLC, so you are good there. Yes, you can wait until you convert into an S Corp. Janice, I recently filed and got my approval for S Corp in July. Congratulations. I don't think I'm going to make 60K. Is that a must? I'm using QuickBooks for my payroll. No, that's just a collective threshold. Again, we just want to make sure that our members are saving more than they're spending on support services. So that's what we recommend. But we absolutely have members that are, maybe making a little bit less than 60K, but they came to us with their S Corps already in place. As long as you understand that you just may not see as much in tax savings until you get to that 60K mark, it's totally fine. And you can absolutely use QuickBooks for payroll as long as you're using some type of payroll software. I've done manual payroll in the past and it is awful. Okay, do I have to switch to Gusto for this service? I have a payroll provider already. So Sophia, yes, with Collective, because we are just an all-in-one like bulk service package, we do partner with Gusto for payroll. So if you did sign up with us, we would switch your payroll over to Gusto. So that way we can manage it for you. Is $1,000 a month reasonable compensation? That is going to depend on how much your business is earning, what type of work you're doing, where you live, how much experience you have. Like I mentioned, I wish the IRS had just more straightforward, like, hey, this is the formula for reasonable comp, but they don't. So it depends on a lot of factors. And that's something that we help determine during onboarding. So if you are thinking of, joining Collective, we would definitely support you with that. If not, that's okay too. I would just seek out a tax professional to help really look at your income and all of those other factors to arrive at a reasonable comp that's going to satisfy the IRS requirements. Can I reinstate an LLC single member? Haven't had income in about 2 years. So Betty, yes. It's going to depend on what state you live in, but most states do give you the option to reinstate your LLC. If it was like terminated due to missing an annual filing or an annual fee, you would have to get it back into good status, like good standing. So you would need to just contact the state where you registered your LLC and then find out what's needed to get everything reinstated. Okay, where can I see on my tax return if my accountant already filed under S Corp? So you would want to see if your accountant filed an S Corp tax return for you, which would be Form 1120S. If they filed the 1040 tax return for you, you can look and see if there's a Form Schedule C included in that tax return that has your business activity on that form. If it does, then they're just taxing you, or they filed your taxes as like a sole prop or an LLC. If there's nothing on the Schedule C and they filed an 1120S for you, then they filed you as an S Corp. If you're just starting up an LLC, what is the best way to handle expenses? Great question, Sam. So if you're just starting, I recommend opening a business bank account in the name and EIN of the LLC as soon as possible, and then trying to use that business account for your business expenses. Just that way you're keeping everything separate. You're not commingling personal and business expenses. And then if you have the bank account in the name and EIN of the LLC, then that liability protection from your LLC covers the funds in that bank account as well. So that is my like number one tip after having worked with the IRS for a long time, is that they hate seeing commingled expenses. So the more separation that you have between personal expenses and business expenses, it's going to make your life a lot easier. When would you recommend to switch from W-9 contractors to employees? Currently, I have 5 or 6 with me. So, Frank, a lot of that is going to depend on the rules of your state. Some states have very specific rules regarding employees and contractors, so it's hard to advise without really knowing, but I believe you can research this on the IRS's website, or your state website. Also, keep in mind, if they are contractors, then you're not responsible for paying their FICA taxes, where if they do transition to W-2 employees, you do have to pay a portion. You have to pay half of those FICA taxes. So it's really a matter of checking in with the regulations of your state, seeing if you're okay to keep paying them as contractors or if you need to switch them to employees. And if you have the extra, the income available to cover half of their FICA taxes. Okay. If not backdating an S Corp, what is the process of starting an S Corp by the top of the year, switching from personal to S Corp at the top of the year? Does it have to be done by January 1st? Also, how does it work being an S Corp working as an independent contractor as a W-2 for another company? Okay, so as far as starting at the beginning of the year, if you want to have the S Corp election in place by January 1st, or be able to backdate it to January 1st, you need to have the LLC in place by January 1st. So you could always, if that is your goal, you could start your LLC this year. And then if you sign up with Collective, sometime next January, let's say you sign up January 12th, we can backdate it to January 1st as long as you have that LLC in place. You can work for another company as an S Corp. They can be your client, absolutely. But if you are a W-2, like they're paying you as a W-2 employee, that money would not be able to be run through the S Corp because W-2 wages are completely separate from self-employment income. And then it would depend on how much those W-2 wages are to see if it would be beneficial to set up an S Corp. So I would schedule a call with one of our advisors to just kind of chat with them. They are really wonderful. You'd be in great hands. They can kind of determine if it makes sense for you to be an S Corp, considering your W-2 income, and also like give you an idea of like how the timing would work. I left my W-2 job back in mid-April. I have not set up my LLC yet. How does the revenue I've already generated get traded? Can it be included on my LLC tax return for 2024, along with what I generate through the rest of 2024? So unfortunately, not, because again, sole proprietors don't have tax flexibility. So sole proprietorship income is really just kind of stuck as sole proprietorship income. So if you did, set up, let's say you signed up for collective today, they file the S Corp, they do the S Corp election for you as of, what is this, 9/25, right? You would be taxed as an S Corp for September, October, November, and December. Your income from April through September would go onto a Schedule C as sole proprietorship income for your sole proprietorship. And then the income from September through December would go on the S Corp tax return. My current business is a single member LLC. In 2025, I want to rebrand and expand. Can I start the new business as an S Corp? Yes, absolutely, Sandy. You definitely can. I would schedule a call with one of our advisors to just get some information from them, talk about your plans, and then see, what they recommend in terms of proceeding with S Corp setup. Can you deduct QBI on the taxable income? Yes, you can. As long as your industry is eligible for the QBI deduction, you can still take the qualified business income deduction on your business profit, just not on the W-2 portion. How big are the numbers should be to come out of sole prop and get an LLC registered? So there's no recommended income threshold for an LLC necessarily, because an LLC, you're still defaulting to sole proprietor taxation, but you have liability protection with your LLC, and you also have tax flexibility. So you can set up an LLC at any amount of revenue or profit. Yes, Sarah's going to send out the webinar replay within 24 hours. Can you backdate S Corp election for the years you have not filed taxes on, so there would be no cost to amend because you never filed? Yes, Chantel, that is correct. You can definitely backdate if you think it would be beneficial for you, and then they would file the 1120S, which is the S Corp return for those years, and then the 1040 personal tax return for those years. So there would still be the cost to do all the administrative work and the 2 filings per year. But yeah, it definitely is easier when returns don't need to be amended. You would just have to find a CPA that would be willing to backdate several years for you. Not all of them will, because it's such a large administrative burden. I'm not past the 60K yet. What software do you recommend to start keeping records until I switch to collective? That is a great question, Frank. I really like Xero, Xero, for bookkeeping and accounting. They're a great software. I tend to prefer Xero over QuickBooks. Or I've heard really good things about FreshBooks as well. And Wave, I've heard really good things about for their invoicing features. So I would say check out Xero, FreshBooks, and Wave. Yeah, those would be a great place to start. If you don't file the annual reports under an LLC and your LLC gets discontinued, what is the process of becoming reinstated? Even if you aren't making much business profit. So yeah, in that case, you would just want to get with the state, see exactly what they're requiring, what reports you need to file, any fees that need to be paid to them, and they will let you know what the reinstatement process is. What about health insurance? So health insurance can definitely be a business expense for your S Corp. You would just want to make sure that the plan is in your business name and being, or I guess it could be in your personal name or business name and being paid through your business bank account. I'm a tax preparer. Potential new client came to me behind on paying taxes. A single member LLC, profit 120K. They have never elected S Corp. Will they be able to backdate if they owe the IRS 75K? Yeah, they can still backdate. If you're backdating the S Corp election to a year they owe a balance on, then obviously that return would have to be amended. So it could like affect their balance due. So yeah, I mean, there's all that to consider. So let's see here. Yeah, you would have to file, like if you go back to last year, if they've already filed their 2023 1040, you could backdate them to 1/1 of 23, but then you'd have to file the 1120S for 2023 and the 1040 amended and then send that in. And that could potentially reduce that balance of 75K, and then you can get them on like a payment plan. But I've never had a problem or seen a problem backdating an S Corp with a client that owed a balance due. In fact, when I worked in tax resolution, we would use that as a strategy a lot of times to get the IRS to accept an installment agreement request, because the IRS actually likes S Corps because they know that they're getting taxes withheld like on the reasonable salary. So they know that they're going to get paid. So we would use that as like a, hey, they're going on this more formal entity where they're going to have payroll, they're going to have withholdings, and they usually looked favorably on. Okay. How much would this program regarding S Corp education cost? I was just confused as to whether this is a one-time fee or a subscription-based payment plan. I say this because you mentioned 300 something. Yes, so this is, we are not just a one-time setup provider. We actually are a bulk service provider. So we handle the setup and the maintenance of the S Corp. Because it is a more complex structure, it's not really recommended to try to manage your S Corp on your own. There's just a lot more moving parts. So it is a subscription-based payment plan where you become a collective member, and it's $349 per month unless you want to pay annually and save 15%. What is the backdate elections and retroactive elections you mentioned? Yes. So if you sign up before October 31st, collective can backdate your S Corp election to July 1st. That way you can be taxed as an S Corp for half of the year. How is the starting basis for the owner of an S Corp calculated once the election is filed / accepted by the IRS? That is a great question. And that's something that we do during the onboarding process. A lot of times it can be just as simple as like the amount that you have in the business bank account can be considered your starting basis. It's really just going to depend on the details of your business. Do I need to pay myself a reasonable compensation as soon as I get the acceptance of S Corp from the IRS, or for some time if I'm going to do retroactive S Corp election? Great question, Swati. So we're looking for a target to get you to by the end of the year. So it's annualized, and we just look to get you there by the end of the year. So it doesn't necessarily have to be like certain months. The IRS isn't going to be able to see like, oh, they didn't pay themselves in July, but they paid themselves in September. So you don't need to worry about it too much, and we help you navigate that process. Okay. Can you still take 50% FICA taxes? Do you mean, can you put 50% of, you mean take 50% FICA taxes? No, not when you're self-employed. You have to pay 100% of those. 50% is only for employees. Or if you mean, can you put 50% of your income on reasonable salary? Absolutely. But as far as the 50% in FICA taxes, those are paid in self-employment tax all by you as the business owner. How can I change from single LLC to one eligible for S Corp status? A single member LLC is absolutely eligible for S Corp status as long as you're meeting the other requirements, like having the cash flow to do payroll and earning over 60K. Does Collective offer services for people who haven't started any business yet, but would like to form an LLC? Yes, we do, as long as you want to become an S Corp. After that LLC, if you're just wanting LLC formation, we can't do that for you, Katie, because we only work with S Corps at Collective. But if you're just wanting LLC formation and you're not ready for an S Corp yet, you can always just go to like Zen Business or LegalZoom, and they can help you with that LLC formation process. Is there any other benefit of having an S Corp instead of LLC other than self-employment tax? Yes. So retirement savings, like we kind of touched on very briefly, are definitely a benefit of an S Corp because you have more flexibility and higher contribution limits because you can contribute both as an employee and as an employer with an S Corp. Third and last question, I promise. No worries. I love the questions. You guys are awesome. Thank you so much for all of this. This is great. So would states like Nevada, Texas, and Florida benefit you on saving taxes, setting up an S Corp a lot more as compared to setting up in states like the DMV area? So that's something that we hear a lot, but it's tricky because with an S Corp, you also have to register for a payroll ID and pay unemployment taxes in your state. So you're under a little bit more scrutiny. And let's say you live in Virginia and you're filing your taxes there and they see you've got self-employment income, but no business registered there. They can actually like fine you for what they call illegally transacting business in their state, which is transacting business where you're living but not registered. You can get court fees, penalties, interest, and they can eventually suspend your right to do business in their state until you register there. So it's not something that we recommend at Collective. Some CPAs, will do that for you, but at Collective, we try to be a bit more conservative because we just don't want to put you in that situation. And even if you look on like LegalZoom, for instance, where it says like, do you want to register in Delaware? If you read the fine print, it also says like, you need to register in your home state as well to make sure you're in compliance. So registering in 2 states just kind of makes it so you're essentially like, you would still have to register in your home state of Virginia. And then if you also registered in Nevada, then you're essentially maintaining 2 LLCs, 2 annual reports, 2 annual fees. It's just a lot more headache. So we just recommend just registering in your home state. Is there any way to backdate the S Corp before July of this year? Yes, you can go back 3 years and 75 days. However, Collective's deadline to go back before July of this year has already passed. So that's the maximum amount of time that we can do it for you. But you can talk to, an accountant or CPA in your area to see if they would go back further for sure. Does the service include the tax saving advice or just the bookkeeping side? Great question, Frank. So the service does include like financial advice and support from our team, along with the bookkeeping, along with the tax return preparation, along with the compliance, the payroll, all of that. Everything we talked about is included. Sathya, yes. Yeah, absolutely. The 50% FICA tax deduction is a deduction for the business. Sorry if this is asked and answered, but do you still take LLCs that will become an S Corp for fluctuating business? I'm an actor between theater, film, TV, commercial, and narration of audiobooks and voiceovers, but it is by no means constant. So yeah, we absolutely have members that have, kind of maybe they make like more seasonal businesses, or say like a writer or actors where you're receiving like chunks of money, but then you may have a couple months where there's not really a lot coming in. As long as you're over that 60K in net profit and you have the cash flow, and S Corp is still okay because you can always like skip payroll for those months that you're not really working and then pick it up again when you do get another job. Okay. I think I got all the questions in the Q&A. I'm just going to go through the chat real quick and see if there's anything that I missed. Let's see. How many years can you backdate the S Corp election? 3 years and 75 days. What if you never set the S Corp up with the state other than acquiring an EIN number? The S Corps are usually set up on the federal level. Only a couple states recognize the S Corp election. This is live, Angus. I think we got that answered. We got all this. Sorry, guys, just checking. Great, Sophia. That's amazing. I'm really glad you found us too. I'm super excited. Yeah, I'm super excited to welcome you as a member. I think I got all your questions, guys. If you have anything else that I didn't answer, you can feel free to email me. Again, my name is Elizabeth Mullins, and my email is just emullins, MULLINS @collective.com. Happy to help answer any questions there too. Oops, I think I got one more question. No worries. Go right ahead, type it on in. But yeah, if anybody else has anything, just shoot me an email at emullins @collective.com, and I'm happy to answer anything, or just schedule a call with one of our amazing business advisors. They are a wealth of knowledge, and can really get more in depth, with your situation, and give you kind of more of like a one-on-one experience where they can potentially like make recommendations, let you know if an S Corp makes sense for you, and like where the timing fits in, all of that. All right, guys. Well, thank you so much for attending today's webinar. I hope you found it helpful. Thank you so much for your time. Shoot me an email if you need, and we're looking forward to hopefully working with you. Take care. Thanks again.